Good morning, boys and girls. Welcome to the Flow Show. Friday's here at last, nearly at the weekend, 24th of January. Doesn't time fly when you're having fun? And we're back to watching central banks with the BOJ today. So we'll get stuck into that. First, let's have a look at what's been going on. In the lead up to the BOJ, we had the CPI data, national CPI data coming out. Headline CPI coming in at a healthy 3.6%. Core CPI coming in at 3%. So some icing on the cake for what was the hike in the end. Some of the core measures, other core measures, fresh food energy were sort of unchanged. One of them came down a bit from 3.9% to 3%. So a bit of volatility there, but overall, that headline number, if maintained, will get the BOJ very much to their sustainably and stable inflation around 2%. We also had the PMI data from those guys as well, a little bit softer on the manufacturing front, 48.8, but services picked up nicely to 52.7. As you can see there, Australia doing a bit better on manufacturing and a touch worse on services too. So anyway, back to Japan. So decent data there, nothing that threw any wobbles into the mix ahead of that BOJ meeting, where they raised rates by 25 pips as expected, now at 0.5%. The vote was 8-1 in favour of the hike. Nakamura, one of the big doves, still saying that they should have stayed on hold. Forecasts, not an awful lot going on there. GDP forecasts for fiscal 2024 came down to 0.5%. 2025, 2026 remained unchanged. There was a little bit of an uplift in some of the inflation forecasts over there, but nothing that looks too hawkish or more hawkish than where they're at now. The BOJ said real interest rates are still at very low levels and they will continue to raise the policy rate if the economy and prices move in line with its forecasts. We'll conduct monetary policy as appropriate from the perspective of sustainably and stably achieving the 2% inflation target. Says inflation expectations have risen moderately. Ueda was out later on saying Japan's economy is recovering moderately, although some weak moves are seen. The timing and the scope of raising rates further depends on the economy, financial and price conditions. It says we need to think about the impact of the rate hike in the context of rising inflation and wages. It says the next rate hike would depend less on economic growth but more on price moves. So they're pinning the next hike to further inflation numbers and price numbers, obviously, including the wages we're going to get. So in the end, nothing shocking. They finally pulled the trigger. They've got another hike under their belt, and they remain on the same path. They were neither more hawkish or more dovish than they have been. Things are continuing to move in the right way. Unless we see a big acceleration in inflation, they'll probably want to sit back and take into account the spring wages to come. So we perhaps shouldn't be thinking about a quick follow-up hike over the next few months, but maybe afterwards. And if inflation is still up there and nothing else is breaking, they'll look to go again. So probably maybe, I don't know, mid to end of Q2, perhaps. We might be looking at something around that time. We shall see. So that's the B&J done and dusted. Price moves wise, we held the range. We were a bit up and down all over the place. We came down, knocked on the 155 a couple of times. That held over the decision. That held over Ueda. What we did get, though, amidst all that, was Mr. Trump out with some lines, which has put a bit of a weaker, or put the dollar on a bit of a weaker foot this morning, but I'll get to those a bit later. In the meantime, we're sort of bang in the middle of this range, near enough. Yet to put in a real test on 157 again. finding resistance up towards the 156.70s, but I think the important price action today was this 155 holding once again, even after Mr. Trump and the BOJ. So that serves two purposes. A, it shows you how strong support is here and that dollar yen isn't ready to fall out of bed. Two, it shows you how much was priced into the BOJ. No one saw anything more hawkish than what we thought was coming. Thirdly, this is proving to be a big old level, and if we do break under there, then it's probably going to have some legs, and we'll probably see a quick move down to 154. So it's moving into the break trade zone again, as I was explaining yesterday. You can look at this one both ways, buying for support and looking for a trade the other way if it breaks. We got all the other PMIs dropping out today as well, dropping down today, should I say. In Europe, we got France coming in with better on their manufacturing numbers, 45.3 versus 42.4 expected and 41.9 prior. So a bit of relief for France manufacturing, although it's still a contractionary number. But services went the other way. That dipped back, was expected unchanged, went down to 48.9. Germany, similar, saw some better numbers as well. Manufacturing, again, up a little bit. Services up a decent amount as well. Eurozone numbers also both going up a bit. And then coming into the UK, same thing there, up in manufacturing, up in services as well. Now, it should be said that there was some underlying components within that, or comments from the PMIs, that are potentially important, particularly for France, because they saw their first round of output price declines. They're still seeing higher input prices, output prices declined. Okay, and this is something I've been banging on about for several months. Plays into my thinking on the ECB will have to cut further than they want or expect, and thus it's going to be weak for the euro. And that's the fact that when you've got low growth, one thing you do to try and boost growth at businesses is cut prices, and that we have seen the first little indication of that in France. Okay, doesn't mean it's going to last, but one little box is ticked for me, and if that continues and spreads, then I'll have plenty of boxes getting ticked. And for my thinking, Germany, different story. They're still seeing higher input prices and higher output prices, so they're still facing or fighting that battle of stagflation. But maybe something will give, because you can't keep having weak business and high prices. You just get worse business. So they may be forced into price cutting at some point too. The UK, the usual rock and hard place. They've seen increased prices as well, both in input and output prices. And they've seen weaker unemployment, or weaker employment, I should say, growing unemployment. So they're facing yet another battle of seeing unemployment potentially rising, but still getting higher prices, i.e. and inflation remaining sticky. So what are they going to move on? Cut on the weaker employment, or stay on hold for the higher prices? This is all going to feed into the next Bank of England decision. And to a point, the ECB's in the same boat. It seems like a cut is coming next week, whatever happens. But you have got the likes of Mr. Holtzman warning that the job is not yet done, and some caution is still needed. So they're all moving into this place between a rock and a hard place, both the ECB and Bank of England. The girl from accounts, Rachel Reeves, told Reuters that she will announce new fiscal measures if necessary on the 26th of March. This would be the spring budget update that she said she wouldn't need to do because she was happy with her November budget, and the markets forced her into potentially doing that. She says the recent bond market moves were not a targeting of the UK. I'll call that absolute bollocks. It was absolutely a targeting of the UK. She said, looking at bond yield moves this year, we are in line with peers, so we should not jump the gun. No, you weren't in line with peers. UK yields rallied much higher and faster than their peers. She says there's still 2 months before the OBR produces forecasts, which will be no doubt a good watch to see how much she's messed things up. But she's confident we can get the growth numbers up. We shall see. We shall see. Right, coming over to the US and yesterday's data, not a lot. We had initial jobless claims, came out pretty much in line, nothing to see here. Bit of a tick up in continuing claims up near that 1.9 million mark, but nothing yet to worry about. As I said, we might start to see some of the effects of the weather, the storms and fires and everything else that's been going on over there. Maybe we'll see that feeding into some of these numbers over the next few weeks if people have been forced to halt work for, having to deal with losing homes and whatnot over there. But it's a bit of a messy situation. But if we do start to see this ticking up, it's likely to be down to that cause rather than any inherent weakness in the jobs market. Canada retail sales for November sucked. Bit lagging because they're miles behind everyone else. We just about finished January. But headline sales coming in flat versus 0.2 expected. Core sales, when you strip out all the bits and bobs, coming in at minus 0.7%. So a bit for Bank of Canada to think about for their meeting also. Right, Mr. Trump. He was out and about. He was at the World Economic Forum yesterday. What a show that was. And he had his Fox interview. So I've just cobbled together all the comments and go through them now. He says Congress is to pass the largest tax cut in American history. And he'll bring the corporate tax rate down to 15% if products are made in the US. He's going to ask OPEC to lower oil prices and ask the Saudi Crown Prince for $1 trillion in investment. He's going to also demand lower interest rates, and he thinks he knows better than Powell over where interest rates should be, and expects the Fed to listen to him on interest rates. He is going to consider talking to Powell about rates as well. He says efforts on securing a peace settlement between Russia and Ukraine are now hopefully underway. He also wants to obliterate US debt, and that will happen rapidly. Then the big comment, the main market moving comment, he said that he would rather not use tariffs against China. So this is a big comment because, as we know, China's a different kettle of fish to your Canadas and your Mexicos. He can wave the big stick at those because there's not much influence. It's not going to knock trade or anything too much with them. But China is a different ballgame altogether. And I think what he's doing in going, or his rhetoric is going slightly easier on China, is he's tying a lot of plates together, a lot of plates spinning in the air. He's tying them a lot together, tying China in with the Russia-Ukraine situation. Obviously, China owns a whole hell of a lot of US debt, buys a hell of a lot of US debt. So it's not as easy as I say of slamming them too hard. So I think he's trying to tie everything together. If he can get a deal with China that suits agriculture, because that's one of the big deals that he put in place in his prior tenure that China thought they would ignore while Biden was in place. So if he can get those back online, get a solution in Ukraine, Russia that China helps with, that would be a huge win for him to put under his belt. So I think he's tying a lot of things together. Doesn't mean he's not going to go hard on China. He's still offered a few threats that if they don't play ball, they'll get tariffed and whatnot. But I think he's leaving the door open a bit more for those guys than he is for the likes of Canada and Mexico. So that's my thinking about that. And if we do get a resolution on Ukraine, Russia, and deals with China, as I said previously, we will probably see a risk rally, the likes of which you've not seen for a long, long time, if at all. He also mentioned that Putin wants to denuclearize, lessen nuclear weapons, something he would be open to as well. And that may form some of the discussions over the Ukraine war. The Kremlin was out this morning saying on his nuclear comments, Trump's nuclear comments, that Putin has made clear he wants to restart nuclear arms cut talks as soon as possible. And it was the US that undermined the arms control framework. If you remember, Russia left the agreement and drew up a new doctrine on nukes while Biden was in play last year. Maybe that will be the basis of getting something sorted there. They say, Kremlin said, the ball is in Washington's court. As far as Trump's concerned, he's ready to talk to Putin. So that's ongoing. We'll have to wait and see when that actually happens. Bit of a strange one. This one I saw late last night. That Carl Bass is apparently being considered by Trump for a position at the Treasury or a defence role. Not sure why why go for one or the other. They're not mutually exclusive. Mr. Bass, if you don't know, is the guy who has tried a couple of times to take on the Hong Kong peg that they run between 775 one end and 785 at the other end. He's tried twice to go for a break at that peg and it hasn't worked. So maybe if he goes into the Treasury, he'll have another go. Who knows? But I thought that was a bit of a strange potential decision from there. Yes, Mike, that's exactly what I mentioned. Trump had a big agricultural deal with China, and they started okay on that deal, and then it all fell apart when Trump got the boot. So that's what he'll try and get back on as well. So that's where we are with all the news and headlines thus far. As I said, the Trump comments have seen the dollar easing a bit as we scale down the tariff trade, if we call it that. But we're seeing the dollar coming back a bit. Well, at least in dollar yen, it's coming back a bit at the moment. And I've been saying I can't see any meaningful reason why this should collapse unless the BOJ were uber hawkish in their messaging last night. All the while, we've still got yields up at quite heavy levels. Still sitting up here, 460s. We had this pullback in yields, but we couldn't get close to 4.5. Then we've had a bounce since. So this is going to keep the dollar, I think, from collapsing too far or moving too far south while we've got the yields up here. We are going to switch into central bank mode probably from this afternoon once we get the the first US PMI out. I think that's, let's have a look what else we've got coming out today. I don't think there's an awful lot again. Michigan numbers, I think those are the finals, if I'm not mistaken. Yeah, they're the finals because we had those numbers out previously. Existing home sales and the S&P global PMI. So again, not a lot of data. So I think we are going to be switching to central bank mode pretty quickly, and the market will remember that the Fed is potentially about to go on pause, and it will want to know how long that pause might be and what indeed may be the conditions for the Fed to even tighten a bit more. So again, I'm not expecting the dollar overall to collapse. We are, though, seeing a bit of a pullback in some of the other pairs. We've got a little bit of breaking going on. Euro dollar testing up at the 104.50s, and we've had a bit of a break. We've even managed to tick above 105s, but that hasn't lasted long. This is the bigger zone here. This 104.50 was decent. This is bigger because it's a much more long-term zone. So it's still on the creep, okay? And it can continue creeping, but there will probably come a point where enough's enough, given, as I said, where we are in the US with the Fed and yields and whatnot, and the economy as well. You know, no one's buying the euro because Europe's doing well. Okay, yeah, there's a little bit of better data today from the PMIs, helping it along as well, but no way is Europe out the woods yet on that. But we've come a long way, so you've got to expect a reasonable pullback. We're breaking the 38.2 fib, or broke the 38.2 fib of just the December move. The next one is 105.70s. That's the 38.2 of the bigger 112 move. So a bit of context needed. Again, short-term moves at the moment. Cable, that's breaking up, still doing nicely. It's breaking, it's holding. So it's doing the opposite of on the way down, breaking support, finding resistance at support, at the old support. This is doing the opposite now. It's breaking resistance and finding support into resistance. So we're above the fib, 123.72, and we're finding that as support. We're now above 124s. We're now up, testing 124.5. And as you'll know, I said this is my big level up here, 124.5. It's a historical level. We played it back early part or last year, April, May. It's been a level. It's been a big old magnet level, 124.50s. So it's one of those historical levels. And we've tapped it this morning, 3 pips short, 2.5 pips short. And we've had a little pullback. But as long as we keep hitting this support and bouncing off support, it's going to keep the upside pressure on. But I was like, oh, what's going on now? Oh, it's all gone wonky. But as I said, this is one of the ones where, doesn't really give you a chance of a pullback, and then you come in a few sessions later and it's 100 pips higher, 100 pips plus high, and that's what's happened. The dips have been very shallow at the moment. Aussie dollar, I thought this shows how you can get the move right, but the market wrong. I thought this might be the one that has a bit of legs on a rally, and it's been one of the slow ones to break. We've finally got a decent break of this zone, which if you'd have got in here, somewhere here, then some decent pips. I've ended up doing a little bit of a chase. I've got long 63.15. I was hankering maybe this morning for a bit of a pullback to add to that, maybe into the zone if it held. But otherwise, it's off and running, but it's not going as big of guns as the other one. So, right trade, maybe the wrong horse. For now, I'm in at 63.15, but it has got a bit of room up to mid to higher 63s if it keeps going. But that's if it keeps going. We'll have to wait and see for that one. But similar to a lot of the price moves going on, Kiwi moving higher as well. So we're still not breaking any trends yet. Okay, we might be breaking some of the shorter term ones or looking to break them, but we're not turning around any of the bigger trends yet. So you cannot rule out a fact that we don't come all the way back down again. Okay, with the central banks next week, if the Fed comes out more hawkish than we're expecting, we can probably expect a decent reversal in this. Whether it can get down to the prior lows, that's another question. And if it gets down there in various pairs, if we do get a hawkish Fed and we can't break through some of these levels, if we hold them again, then that'll be my signal at least to maybe try and buy the dip on those. Right, what else is going on? Again, you can see that a lot of these moves are dollar-led. We've had a bit of movement in euro sterling. Again, cable going a bit quicker, slightly better data in the UK, but it's still not, breaking down yet. We had a hold down here, 84.20, top of my zone, but we still keep banging ahead on the 84.60 level. So this is still reflecting some of those UK worries, in my opinion. Not the fact that the Eurozone is suddenly doing much better. But this morning, a bit of that is in this number as well, with those slightly better PMIs as well. But otherwise, coming through all this stuff, Trump and whatnot, not going anywhere. Aussie Kiwi, same thing, going sideways, not going anywhere. So there's no Trump volatility in these crosses, as we've been saying. Dollar China, that's taken another leg lower. We were messing around this 728 level. But those comments from Trump last night helping dollar yuan a bit lower. We're getting down towards the next level for me, which is sort of from 723s down to 721s, that sort of area. I already had to snip off when we had that move in 726s. I'm going to have a little snip off if we get down to maybe 723, 722s. Even if we get down to that number, that'll be ideal, but I'll take what I can get. If we're breaking under there, 721s, then I'm going to start yanking down my stops on the rest of it and just protecting the rest and see where we go from there. I don't think the Trump threat to China is over yet, but he's taking a slow and steady approach and offering some olive branches, shall we say. Right, let's have a quick look at your comments, see if there's anything going on there before I start waffling on again. Let's have a look. What's anything you've got going on there? Again, as usual, if you want me to talk about something, just throw them in. Mike, no end of month flows, not today. We've got a week before the end of the month. We'll speak about end of month flows tomorrow. Okay, I put a ban on people in our chat room when they get a yellow card if they start talking about end of month too early. There's no point talking about end of month 7 days before the end of it. So we've got no indications what it's going to bring, so there's no point in talking about it now. You want to look, Dimmy wants to look at some of the crosses. Let's have a look what's going on in some of the crosses. Not an awful lot going in some of these crosses. Yeah, we've had some moves going on, but we're all looking pretty much like we're going sideways. Euro CAD is probably one of the bigger movers. We keep nudging against this level up here, 150.5, and can't get through. That's a bit of a reflection what we've seen in dollar CAD as well, getting up to that 145. Several goes up there and can't get through. So this one, it's gonna come in what we do with the Bank of Canada. I think it could be the maker or breaker, but it's still looking fairly strong if comparing it versus something like dollar CAD, which has eased off a bit. So by and large, a lot of the crosses aren't doing an awful lot, but you've got some of your standouts like this one, which are doing a bit, which is still, in a bit of a sideways action. Obviously, fairly wide range. We've got the old magnet down here, 146.5. But this one still looks fairly strong, but it's going to need a break above here. Get that, then we're probably going to be looking up towards the 151s at the least, and some of these highs that we've seen previously. So again, if you're long this one, you need that break, or there's a risk of getting a bit of a steeper pullback. And again, that's potentially another break trade opportunity. What are you doing in these crosses, Dimmy? Let me know. You're a Kiwi. Yeah, not doing an awful lot. You can maybe have a case to pick a bull flag out of that one. But yeah, not moving it too fast. Same as Aussie Kiwi on that one. Dollar Mex. I know Blake's in this one, down around these levels. I think there's still a chance because we haven't really had the trade tariff discussion by Trump. He's hit these 25% tariffs coming in February 1st, but it's not on anything to do with trade. That's still potentially in the pipeline. So there is a chance that we get a big headline that sends us shooting up. I think if we get that, that's the one I'll potentially look to hit, because the threat doesn't mean it's going to happen. Likely to get people round the table. Mexico already showing signs that they're willing to talk and adjust certain things. So I've got a bit of support down here, 2009 to 2018, this two levels, fairly wide, but this is dollar mex and that can move that far in a blink. So that's my main support zone down here if we get down there. Don't know if I want to try a dip buy. If I think tariffs are coming, or if you think tariffs are coming, then the potential for a dip buy is there. But I'd rather trade the actual than try and front run something that may not come. So if we do get a threat of big tariffs on trade and we get a rally, I'd rather trade that outcome for a short than try and guess when we might get something to catch a rally back up there. So that's my favoured sized. Anyway, Iron Nut, you tried a short in the old DAX. If you follow me a lot here, you know what my methods are for trying to pick tops. Okay, you need to see some price action, supportive price action that's going to tell you that you've made a top. Okay, and that's making a few highs and holding those highs. This one here, we had a pullback, but we had a high, we made a new high. That to me wasn't a signal to try it. But then here, when you hold that previous level, now you've got some evidence of a potential high. That's your signal to try a short. This isn't price action I want to be trying to short at the moment. Okay, because you got gaps and it's not even giving you a dip. Okay, so be very careful when we're in uncharted territory up here. Okay, this is all-time highs. Okay, we've got no history to rely on. Okay, so you need to wait, and you can wait intraday, go into your shorter term charts and just wait to see. Do the exercise that I do. Build your levels up. So start building. We've had a bit of a resistance point here. It's only small. It's only short term. You know, the course of a half a day. Okay, a level where we had resistance. The price couldn't get through. Then we broke it. Then we're trying to hold it. Okay, this is what you want to build up. So if you come down here and bounce off of there, then longs are the trade for you. Okay, but if we come under here and start finding it as resistance, then that's when you need to look at shorts. Okay, if you're just shorting because it zoomed up another 200 pips, you're just taking a punt, in my opinion, mate. Okay, wait for the price action to tell you and go into the short-term chart. Start picking your levels. Okay, where you can see there is potential price action that you can rely on. Okay, bit of a level here. Short-term resistance. Oh, let's take that bloody thing off. You know, short-term resistance. We broke it. Now it's holding. Okay, you do this exercise as a price is developing, then you find out the levels to trade. Okay, but when you're talking about all these short-term levels, you can't rely on them. You know, I wouldn't say 100% I'm going to bet the farm on 21.30, 3.30, 3.28. Okay, but I've got something to trade against here. You've got nothing to trade against here. All you've got up here is the prior high. So if you want to keep selling highs, okay, and getting stopped for 20 pips and selling the next high and getting stopped for 20 pips and the same thing, you're going to bleed money away. And then when you do need a winner, you have to get all that back. Okay, it's all right losing, but don't be losing just trying to pick a high every time the market rallies, thinking it can't go any higher, because quite clearly it can keep going higher and it can keep knocking you out of trades. Okay, so do the exercise, get your levels on, and if they don't work, you delete them and you move on to where the next level has shown up, until such times you build up strong levels and you knock out the weak levels, because that's all the price action does. That's all the price action does. I mean, this is what I've been trying in the S&P. I've been triggered on my long stop. Not ideal. I got triggered pretty much on the close yesterday in this move, and this is the cash index. So we broke above the highs right into the close, and it triggered the stop, my buy stops in the futures. So I'm long my contract 61.20. It's now trading 61.13. And I'll go into this one. See, this one isn't reflective of my price feed because they're based on different futures, but you can see what's happened. We had the break here and it's trying to hold it. It's not doing so here, but it's not collapsing back under. So today's cash market is going to be important, this one. If we're still opening above 6,100, then that's going to look pretty strong for a potential for the break to continue. Okay, so this was my evidence. You know, highs over a good period of time, struggle. You know, this is over a month's worth of price action here, between here and here. So that's why I've got interest in trying to break trade long. Shorts, you could have used that level as a short, but again, you didn't need to be wrong. You know, if you shorted at 61, 61.10, you don't want to be short anymore, because you're getting the break that couldn't happen all these times. So if you want to short now, you either need to short it back under this line if it's holding, or you wait for the next time we get that sort of pattern. Okay, but if it shoots up another 100, 150 ticks from here and you think, oh, that's enough, I'm going to short it, you know, you're risking money where you don't need to. Okay, let the price action do the talking. Right, anyone else got anything else? Gold, if I don't have a look at gold, I'll get told off as usual. So let's have a look at gold. So here we go. We had this rally, we had the pullback, a little bit messy, held this previous line, broke it. Now we're just getting back above this 27.70 and we're starting to hold it. Okay, so that is potentially giving it, or going to give it, the springboard for a run up to the highs. Okay, because the price pressure has now decided, right, we've made another leg up and now we're going to try and keep that leg going. So gold, every chance now of going back to those highs, and then you have to see what happens. If we hold that there, it could be the mother of double tops, because that, again, that's we were doing this in October and it's now January. So if we hold here, and it's a strong hold, and it might just bang its head on there for a while, if you want to be short or try shorts, that's where you want to try it. But if we're breaking 28, you won't want to be short. Okay, so low risk trade if you want to be short in this one. I wouldn't short it here, I'd short it up there. And again, maybe a break trade if we are busting through there. But I would expect if we get up here, unless there's some big news drivers, we're going to maybe bang our head on it for a little while, a couple of sessions, maybe have a couple of shallow pullbacks. But if I don't pull back too far, say you pull back to somewhere like here, 25, 50, 60s, then that's going to keep the pressure on that high. And then maybe we go back up and we mess around with it a bit. The more times we bang our head on there, but don't stray too far on it, the greater the chances we're going to get a break and off we go running again. And then who knows, maybe we're 3,000 next pretty quickly. Right, it's Friday. I'm knackered. I'm going to call it a day. Thank you as ever for coming here and supporting us at the Flow Show. Mr. K-Man should be back on Monday to help me along as well. I hope you've all had a good week. And if you have, don't go blowing it in the last few hours on a Friday. If you've had a good week this week, you don't need to push the envelope. Take some profit, go and spend it on yourself, your family, whatever. Make use of the money you've made. Come back on Monday and do it all again. So have a great weekend, everybody. See you all on Face. Yes, Brian. Have a good one.